Let's get in Vikas Khemani, CEO of Edelweiss Securities, joins us on the show with his perspective on the markets. Vikas, how are you looking at trade right now? Do you think the market will pretty much adjust itself in a range after this strong pullback or short covering led rally?
Yeah, hi. I think yes. I guess this sharp rally, in the recent past has actually, sort of extended back by some of the short covering, and I think people who were underweight kind of jumped in the markets. And I do feel that at these level markets will have to consolidate. I think further good news will have to come to sort of drive it from here, and I think that will have to be more in terms of numbers. So far obviously stability in the rupee and also some amount of stability in overall emerging market currencies have helped the sentiment, and I think a lot will depend on what comes out in the monetary policy on 20th, and also how the number follows up. But I do feel that investors would be cautious at this point in time here, because I think a lot of it is priced in at this level. A lot of uncertainties can still lead to some market corrections. So I think what we've been seeing is some amount of profit booking has been coming at these levels, and I do feel that stock specific and sector specific activity would be there, but at index level you will see some amount of consolidation here.
Fair enough. Vikas, stay on with us. Let's get in recommendations. Mitesh, you have a few stocks to highlight stepping into trade?
Yeah, a couple of banking stocks, and we've been liking the PSU banking a lot. So those are on the buy list today. Look at the market and then you can take your trading decisions. Vijaya Bank can be bought around 37.80 with a stop at 36.35 for targets of around 42. Bank of Baroda is a buy with a stop below 508 for targets of around 545. A few sell calls. Colgate is a sell with a stop at 1240 for targets of around 1175, and I've got a sell on Infosys if it starts trading below 3040. That's the 20-day average. Sell below 3040, stop at 3080. Look for targets of around 2975, 2970.
Okay, fair enough. Let's just quickly recap Ashwini and Sandeep's recommendations earlier in the session as well. Ashwini has 6 buy calls, one on HCL Tech, Bharat Forge. He has a buy call on PFC that's also coming in with a target of 134. L&T is a buy with a target of 840. M&M Financials is a buy as well. And you have a buy on Lupin September Futures, that one with a target of 900. In the meanwhile, Sandeep also 3 buy recommendations and 2 sell recommendations. Tata Communications, Voltas, JK Lakshmi Cement are on the buy side. On the sell side, J. Prakash Associates, which had a significant fall yesterday, and BHEL.
And as always, just before the bell, like we always do, let's nail it down to one idea each. Ashwini, what is your top pick for the day?
I think rupee is back above 64, so getting back into tech stocks is a good idea. So HCL Tech can be bought.
HCL Tech from Ashwini. Mitesh, what is your top pick for the day?
I will want to go long on ITC once it starts trading beyond 339.
I just want to revisit the levels on ITC and then HCL Technologies. That's Mitesh on ITC levels, target and stop loss on your screen. From Ashwini, it is HCL Technologies, and again levels and stop loss that will come, or target or stop loss will just come up on your screen. A minute to go, and as we walk into trade this morning, I would say the opinion is honestly divided. A few good things have happened both locally and globally, so we clearly are not in a very dire state, but since we are pitted against a lot of big market moving events next week, I doubt that anyone, traders or investors, they would like to put too much of capital or too much money to work. Rupee also has started retracing. It has cracked below 64, so that again could be a small headwind, so to speak. But then IP data will be a talking point. The headline number is looking impressive. Even though most of the brokerages are maintaining that it's too early to assume that the worst of the economic condition in India is behind us. So we are in for an interesting day of trade. Let's see whether global stability versus local volatility, what really rules the markets today. 20 points down for the Nifty. This is honestly in line with what the SGX was indicating and what the SGX was suggesting. What about the Sensex? The first rates are a downward bias, or I would say a flat bias. It's trading flat with a downward bias. Individual stocks, JP Associates, it reversed yesterday. It has reversed a bit more. It's a story of buy on rumors and sell on news for JP Associates, now at 37. Ultratech Cement appreciated yesterday. Now it is down by about 7 rupees. I want to look at private sector banks, especially the mid-tier or the new private sector banks. HDFC Bank on your screen is at 632. ICICI Bank is off to a weak start. Axis Bank is threatening to go below 1,000. Kotak Mahindra Bank is at 697. Where is Yes Bank? It reversed, and it reversed in a rather meaningful manner yesterday. It is at 275 rupees. Quickly, Reliance and ONGC, heavyweight stocks, they both corrected yesterday on strong volumes. They are off to a weak start. So by and large, all large Nifty 50 heavyweights are off to a weak start, but it's not a very scary start. Sensex is down 42 and Nifty is down just 15 points.
Oh yes, indeed. You're looking at a Hero MotoCorp gaining about 2%. There's IndusInd Bank, which is holding fort. As Nikunj pointed out, HUL, ITC, seeing some traction there. Should bring up some of the key technology names. Infosys is open low about 2%. Reliance Industries is also looking weak. HCL Tech is down by about 0.7%. Bharti Airtel has had a weaker start in the session. Bring up Bharti Airtel, that one also opening low by about 0.6%. Some of the broader names should bring in an MTNL on the refund that they've got. That one opens high by about 4%. There's also talk about Westlife and interest coming in there on account of a potential tie-up. Votable buying the stock. The stock opens low by about 2% at 324. Some more broader market names should bring up on your screens. Financial Technologies, after yesterday's run, 3.5% down on that stock. There are some of the brokerage stocks such as the Motilal Oswal, which have opened a bit lower in the session. Balakrishna Industries, very low volumes there, but that one opens lower. Some of the real estate names, Prestige Estates, Puravankara, also open lower in the session. And you also have some of the cement names which are not doing a whole lot. JP Power down about 1.5%. So not much traction there. I see a Jyoti Structures, Simplex, Infra. Those are some of the stocks which are holding out right now, but it's still looking like a listless session. MTNL, of course, up 4.5%.
It's bouncing back, and Nifty futures have managed to bounce back already. They're trading at a 17-point premium. There you go, Nifty futures 58.66. So dip buyers are clearly active and they are dominating markets. That's the market breadth for you. 365 advances versus 265 declines. Mid-cap index, again on a relative basis, is outperforming the broader market, and that's been the big trend so far, at least when it comes to this week's trading action. Because in dollar terms, Indian markets have appreciated by about 13% plus from the recent low. So what are you advising the clients? So should they use the rally to their advantage to cash out, to lighten up?
I think Nikunj, at this point, I mean, we've seen a significant correction and market recovered. So in that sense, in the recovery, people who were underweight in the market, I think, ended up buying a little bit more. But I think probably by and large, most of the institutional investors have been holding on to their positions. It's just that realignment of the portfolio has to be done, and at least we've been advising investor to, I think, stay away from the banking sector or from overweight position. I think stay neutral or underweight on the banking position, because I think that is where, especially in the PSU sector, still asset quality issues are not over, and we think that this volatility will continue. While there is some cheer, some good news which continues to be there, but I think a lot more uncertainty, lot more volatility, lot more events are there, both local and global, and I think that will have impact on the sectors like banking, and I think that is one key sector one has to really play carefully, and we've been advising to reduce exposure on this sector. And others, I think from a long or overweight perspective, we've been kind of very, very positive on IT, given the global growth coming back, rupee weakness, and I think overall defensiveness of the sector. We've been very positive on pharma. So I think it is against more sector-specific realignment of the portfolio we've been recommending, rather than taking a big call based on only a 13% move in the portfolio in the markets.
How are you approaching some of the investment-led themes, especially cap goods right now, Vikas?
I think definitely, there is a little bit of case which is being, or the case is being made that I think if you believe that economic cycle is, or capex cycle is close to bottoming out, and valuation of the stocks are looking interesting and attractive. I think we have done a lot of work on that, and we feel that we are close to bottoming out of the cycle now. How long it will take in terms of panning out might be slightly longer than expected, but I think there is a risk reward which is sort of getting in form of in favor of looking at some of the industrials and capital goods names, and I think we've done a lot of work on that. I think recently we've also sort of done in-depth work on Larsen and Toubro, and we put out a report under Brevard series, and where we mentioned that I think the stock risk reward is in the favor from here on. The order book is accreting but slowly, and I think a large part of the order book is I think now on track in terms of execution. While overall environment is slow, hence the sentiments are bad. But I think if you look at slightly long-term picture or slightly recovery in sight, then I think capital goods or industrial stocks can look attractive from here. So I think incrementally we've been advising investors to look at stock specific, to look at company, and I think what sector they are exposed to, and I think make selective bets in terms of capital goods and industrials.
Because what happens if next week the Fed outcome is favorable, which is Fed decides to taper light? So if the outcome is favorable, what could be the best case scenario for emerging markets and for India?
No, I think tapering is probably more or less sort of factored priced in, and I think taper light, or I think there are various views. Some people believe that tapering would be light. Some people would believe that tapering could be sort of a little bit more accentuated. So I think I do feel that if tapering is sort of given, or tapering would begin in some sense or other, and the large part of the impact that has been factored in. If it is taper light, probably market will especially the emerging market would rejoice in the short term. You will see currencies recovering, but I would say that would be probably a short term phenomenon. And I think Fed will try and basically get into the tapering by sensitizing the market. So I think they first did by sort of making some statements, and I think which already sensitized the market across the globe, and I think probably that was their objective which they achieved, and I think that's how they would probably deal with it. I don't think the idea would be to sort of give knee-jerk reaction to all the markets and kind of have a systemic kind of risk. So I would say it will be more like a taper light kind of situation, but at the same time I think you might see that's a little bit of rejoicing which already has been seen in the emerging markets, and I think that might continue for some more time. But again, I think over a period of time it has to get readjusted, and with this readjustment phase is going on, and I think in a longer term, in a medium term to longer term, emerging market currencies would remain under pressure. Dollar will keep on appreciating. That trend I think is here to stay. It's just that how do you sort of pan out? How does this trade pan out from a short-term volatility perspective? So I mean that is one thing one has to play out, and most of the emerging markets I think will have to adjust to their productivities or improve on their productivities in terms of being more competitive, and I think in terms of holding on their currencies.
So Vikas, what is a good investment in this kind of a market? Because by the time core fundamentals would improve, stock prices would have appreciated. I mean, if you wait for the robin, the spring's going to be over.
True. No, I think so. Again, there you have to have a balanced approach, Nikunj, in this. Some part of the portfolio you have to have which is defensive, and you're not aligning to only one side of the argument. So as I said, that we are sort of at least of the view that IT, pharma are the two sectors which are sort of defensive, also aligned to the global growth, and which will have to have in the portfolio, which will also I think provide both growth as well as the defensiveness of the portfolio. And other side we are saying, I think look at the stock specific, slightly out view, as I said, that in the capital goods industrial space where I think valuations are not very expensive, and I think companies are solid, balance sheets are not broken, and as the environment changes, you will see that kind of recovery coming back in that. And as I mentioned, Larsen and Toubro is one such case we had recently recommended, and there are many such story in infrastructure space, capital goods space, where balance sheets are not broken, and I think long-term strength of the business is good. And we have advised investors to start beginning to look at these kind of stocks. If you have appetite of slightly higher risk, we see a lot of value in the mid-cap space. I think large-cap stocks have rallied in the recent past, but I think mid-caps have still been ignored by the market by and large, rightfully given the current environment and the volatility in the environment. But I think if let's say tomorrow recovery were to come, I think a lot of mid caps which are extremely cheap and underpriced, they would definitely give superior return. So one has to look at again that space on a serious note if you were to make the investment slightly counter cycle.
Fair enough. Vikas, give us your outlook on the consumption space right now, and how much weightage would you assign to the sector in a portfolio?
See, I think one very clear theme which is emerging out in consumption is I think the slowdown of the consumption which has been underway, and I think so you have a classic high valuation and over ownership in the stock by the institutional investors, and also you are beginning to see somewhat slowdown in and it is not a negative growth, but it's a slowdown of the growth, a deceleration of the growth. So I think you will see somewhat as the environment changes, as it will change. So it again depends on how fast and when the environment changes. But we do think that risk reward of remaining significantly overweight or invested heavily in consumer is not favorable. We've been advising investors to reduce the consumption stocks, and I think look for some of the stocks where there is a value and slightly counter cyclical, and I think that is where I think risk reward favors. So, and again, having said that, I am not saying that these companies will continue to do well. These high, good balance sheet, good companies, they will grow. But at the same time, from market perspective, they might not give the return, what probably would be expected from either overall index or other rest of the sectors. I mean, similar trend we had seen in post 95 to 97, 98 kind of consolidation. In that period, also in consumption stocks had gone to high multiples of 35, 40 times PE, and post that, when the rest of the sectors did well, I mean, consumer stocks delivered absolute return, but they did underperform. So that's the similar trend I see. If recovery happens, consumer stocks would definitely deliver absolute return, but they might not deliver outperformance.
Wockhardt up 47, Ajanta Pharma up 18, Strides up 14 rupees, and there is positive price action in Dr. Reddy. So pharma, I wouldn't say across the board, but selectively pharma is having a good day. There is price action in Hero MotoCorp, which has been a very smart and a trending stock. The real logic in Hero MotoCorp is that this is one company which will benefit because of rural demand, and if economy slows down, downtrading in the economy will start, and the consumer preference will shift from high-end products to medium-end or the low-end product. Because whereas the urban part of the economy is slowing down as no job creation is happening, inflation has kicked in, the rural end of the Indian economy is not slowing down. Monsoons are strong, MSP prices are poised to go higher, food security bill has kicked in. So what is the best way to capitalize on the growth of rural India?
I think, one, I think clear focus item is to play on agri and related sectors. So that is where I think, since monsoons are also good, and I think, so clearly to play agri and related sector is the best way. So I think, seeds company, agrochemicals companies are, I think, very best placed in this. That is one segment. Second, I think, is tractor players such as Mahindra and Mahindra. They've been doing very well, and I think also they have a lot of, other than tractor, also rural portfolio. So I think that stock is something what we've been recommending, to have a quasi play at the rural consumption, rural growth, and also somewhat play on the upcoming elections, because that is where a lot of the vehicles get used. So I think that is one stock we've been recommending from a next 6 to 12 months perspective in that space. Other than that, I think one has to look at some of the ideas in the micro irrigation space, which I think the growth has been coming back. So I think agri related and somewhere around tractor space is what we think is the best place to play the rural demand at this point in time.
Okay, you can see those changes flashing on your screens. FTSE index changes, that is in the FMCG index. I think United Breweries has been added. There is DVs which has been added to the FTSE Asian Health Index with a 30% investment weightage. Some of those other names will also come up on your screens. DVs, of course, have from the pharmaceutical pack, has had a splendid run. There's United Breweries as well, which is in the FTSE FMCG index. Excluded BPCL, Wockhardt, DLF, Siemens are some of the names. They've added Tech Mahindra to the Asian Tech Index with 24% investment weightage. So some of those changes will have some sort of a sentiment rub-off on the stocks. At DV's Labs in today's session, Wockhardt, that's a mighty 7% move coming in on the stock. Should bring up the year-to-date performance for these counters as well. Tech Mahindra, both Wockhardt as well as DV's Labs. And Tech Mahindra is the other one. That's also been, that one is, of course, Wockhardt is down about 57%. DV's Labs, United Breweries, Tech Mahindra, those are some of the other names which will also come up for you on your screens. Also, a quick programming